Happy Friday, traders. It's 8:02 a.m. Chicago time on the 22nd of April, 2022. This is episode number 2218, coming at you from home this morning as opposed to the office. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a market that is really resting slightly risk off this morning. The European markets are taking it on the chin a little bit, and the U.S. markets are basically unchanged or sideways. Although the S&P is down 10.5 points from settlement, it's the price action really is unchanged. Seeing balance basically across the board. Even the NASDAQ has a completely balanced profile today. Really resting. The overnight session, again, slight risk off. The market, of course, experienced some jitters yesterday on Fed comments, but really the highlight is the ECB really has turned hawkish about how they are going to drain liquidity, how they're going to treat inflation and fight it with interest rates. This is really important. This is causing the Eurozone and the German stock market to really fall. Some good PMI numbers, on the other hand, out of Europe and retail sales out of Great Britain. Retail sales out of Great Britain actually came in slightly weaker, off 1.4%, expected to be off just 0.1%. The PMI numbers is what I was referring to. The PMI out of France, global services PMI and manufacturing PMI came in pretty strong. They beat expectations. S&P global manufacturing PMI out of Germany, a major number, 54.1 versus 54.8, pretty much in line. Eurozone global manufacturing PMI came in at 55.3 versus 54.9, and the S&P global manufacturing PMI for Great Britain came in at 55.3 versus 54.8. Pretty decent numbers out of there. And then since then, not much. President Lagarde is speaking currently, ECB's President Lagarde. So look out for comments on that. I'm sure my news feed will be chattering away. So again, the ECB is kind of surprising a little bit. Later this morning at 9:45, we get the same S&P global manufacturing PMIs for the U.S. Final for April, expecting 58. Composite PMI expecting 57, and global services PMI expecting 57. And then we wrap up the day with the governor, with BOE's Governor Bailey. The French election this Saturday, the second round, Macron has been pulling ahead. But really, it's an important outcome on this election as Macron's opponent, Le Pen, is expected to be hawkish on Europe, NATO, and so on. Apparently more of an isolationist, nationalist kind of candidate, which can have some more consequences on Europe, in addition to the mess that we're in with Russia and Ukraine. So that's a potential risk overhang there. Turning our attention to oil. There's some demand destruction on oil occurring in China as a result of this really stringent zero tolerance policy on COVID. Factories have been shut down. You heard about this through the Tesla report yesterday and or the day before, and so there's oil's been kind of moving between $105 and $100 back and forth, depending on what's happening in China and a few other inputs. So that's something to just keep an eye on. Same with copper. It's just not much being manufactured. And then looking at the S&P, we've traded 220,000 contracts so far. 83% of the inventory is short, is below settlement. and 31 and a quarter points of range, and we've really moved that point of control down. We've jacked that point of control way down yesterday, brought it down with us in what was a bona fide, or like some people like to say, bona fide, trend day down yesterday. Very, very bearish action, which I'll be honest with you, I expected this last Tuesday and got the exact opposite. We basically took back everything we did last Tuesday, and we are within earshot of that major test area down at 43.34.5. So let's take a look at the S&P, and I want to just start by looking at the composite, because we want to look at the full narrative at first. So here's the review segment. I'm going to clean this up a little bit by just looking at the profiles. Here we go. So we had this ripping rally that took us all the way up to the high. Okay, we have this a drop into 4,100 based, this is back adjusted for the June contract. And so your number here may not be the same as mine. And it's just ripped. You could see this was a very active week, very active price discovery, multi-distribution profile, and it just ran away. We put in this swing high above 4,600 at 4,631. Then we pulled back. Then we had a failed attempt at the high, and then we started walking down. And then we consolidated last week. We had a very clear, beautiful consolidation here last week. Then we opened Monday below the balance, tested down, then tested up, and finished basically where Thursday before Good Friday finished. So these closes were exactly the same. Then on that day, we had a bit of a formation that looked like this, with the VWAP mid above, point of control above, and this it had a weak bottom, and the expectation is it's likely to take that low out around 71.50, if I recall from last Tuesday. I'm scarred by this trade. 71.50, and the expectation is it would give in, given the balance above, given the amount of volume that's sitting above, from 29 to 60, it would give in and go down to 34.50. Okay, 43.34.50. That was the expected natural action that would follow this kind of a move, where we have basically moved down, then flagged, moved down, then flagged, and then moved down, and then now we have a sideways flag. The expectation is it's just not able to maintain these higher prices. The one-time framing down on the weekly, one-time framing down on the daily. The expectation is it would give in to the short side. Instead, last Tuesday, we had a rip up, and we ended up testing the 44.60 and above, and we ended up pushing higher. Had a resting day, basically a resting day on Wednesday of this week, and then yesterday we open up higher. We're in a gap. We test the 45.09. We had a couple of quizzes during the Trader Bite yesterday. You might want to watch the Trader Bite yesterday. It really goes through the auction process in some detail, and we said that if it maintains above 4,500, then we're looking for 16. Otherwise, we're looking for it to roll back over into 29, to test 29 with 55 as the key target yesterday. Value low at a minimum. That was my target for anything that drops below 45. Tests above 45, drops below, pulls back, and then starts to fail. 55 is a key number. Well, yesterday it did. The 84.85, let me pull it up actually. It did the 84.85, broke that. It did the 75, little bounce, broke that, and it just kept going and going and going. Very, very interesting trade yesterday. Hopefully, nobody got too damaged by it. A very strong trend down, which was relatively clear that that's what was coming. Here's what I put up yesterday. I said, if we take out the 84, 85, then we're looking for a test into 75. Then we're looking for 67 to be tested. 67 to be tested for a little jiggle. But really, the main number we're looking to test now is 55. So I was looking for about 30 points of a drop, and a total of about 54 points, which is the statistical range for the day. We actually held at 55 a little bit, and then we pushed to 44, 40, next area, and then we just continued on and on and on and on. So that's how that played out. So what we had yesterday is a really engulfing day. We've traded the entire range for the week, and notice the profile for this region. This profile marks everything that has happened since. And I talked last week on Tuesday, I talked about how we are right at this neckline. And as soon as we break through the neckline, the drop is likely to be relatively quick, and the extended target is likely to be 42.50 if it gives up the 34. Okay, so that's quite a bit of range there. And the reason behind that is because there's very poor structure. Those of you who've been around a while, you've heard me talk about the brick wall, missing blocks within it, making it weak. When it starts to crumble relatively quickly. And this is what we had in this run up in March, really poor structure. And you can see it in the volume profile right here compared to all the balance that we have up above. Where's this volume going to go? For each buyer up here, there's a seller. Okay. For each seller, there's a buyer. And if those buyers start seeing this thing drop like this, where do you think that volume is going to go? What does it become? It becomes selling volume most likely. And not all of it, but it tends to start to push us down. Here's yesterday's action. Here's yesterday's action. Ran just as expected. Just a really an open out of range, a push up to 08, 09, comes back down. We're looking for the 84, 85 here. Tests through to the 87. We have an IB at 87.75, breaks through, and then what does it do? It uses the 84, 85 as resistance support, becomes resistance in this area right here, and then we start on our way down into the 75. Right here, it just chops around the 75, breaks through, tests from below at 73.50, continues. The next area to test is the 67 right there. 67 holds, comes back to the 75 or 73.5, breaks through the 67, becomes resistance, 66, and now it's likely to continue to 55, comes back to 55, tests from below, continues, and so on and so forth. We take out the low. What do we do after we take out the low? You saw this before your very eyes. What does it do after it takes out the low? It looks like it's going to run away, but guess what? This is a major stock zone, the 44, right? We had a very old double bottom. 44 gets tested from below. So in case you missed all this, you got to keep looking. This is why having that understanding of the narrative, is so important, because once you understand that it's giving up balance, it's giving up the prior day's balance, this is likely to push pretty hard because it's giving up balance. We accepted the prior day, we accepted this range between as I said yesterday, 55 and 75, and it's giving it up. So if it's giving it up, then it's likely to drive more and more. This volume is likely to puke, and it's likely to drive more and more. And then that's where you end up with the kind of action that we saw yesterday. Very clear, very respectful of our stock zones. Very respectful of our stock zones, and tons of singles yesterday. Singles at 77 something, 72.50, 11.75. Single prints still open at 43.64 and a quarter, which I expected to be taken out last week. And look at yesterday's profile. Yesterday's profile is an active price discovery profile. How do I know this? No consensus. It just keeps going and going, and it shifted the point of control to the bottom of the day. Pop quiz. When we have a trend day with the point of control at the extreme, what do we expect in the overnight session? What does this normally tell us? Let's see if you've been paying attention. What does it tell us when we have a configuration in the volume profile that looks like this, where we have a trend down and it closes at the low? This means that, that's right, continuation. Good on you. So recognize that. It's an unfinished auction. The auction got interrupted by the fact that the day session ended. You know, somebody came in and said, oh, no, we didn't find buyers, but we're going to stop right here. And so what happens is, as soon as we open, the habit is that because we didn't really find buyers, the fact is that low is vulnerable. Statistically speaking, that low is vulnerable. Historically speaking, with a historical probability of 87%. Okay, past performance is not necessarily indicative of future results, but that's how it shakes out. So going short into that, we find, here's the overnight session. What do we find? We open back up and boom, lower low. Very, very common. Okay. And then what we did yesterday is we found a spot to stabilize. Remember the 63. Here, let me turn on the master levels. 63, 60, 43, 64 and a quarter single print there. We basically went through by a few ticks, and then now we've consolidated, and we're ending up with a fairly balanced profile. Point of control is right right where we're trading, with the full session VWAP, full session mid, full session VWAP, full session mid, right in the area. So I'm going to throw this at you. I'm running out of time. These are supposed to be 15-minute videos. They never are, especially in an active market. I'm going to throw this at you. This is the configuration we're coming into today. What do we expect at the open? Given how we finished yesterday, given the narrative, given what we've done overnight, given the position where we are now, what do we expect on the open today? It is balancing overnight. The market is in a holding pattern. So that's exactly right. We expect it to be choppy, but following an aggressive selling day with a very large range, right? The range yesterday was very dramatic. We have a high of 45.09 and a low of 43.80. So that's a grand total of 129 points of range. That is outstanding range, statistically speaking. Outstanding range. We have a very extended range, and then we have a choppy overnight session. We are likely to see people come in and panic. So it's going to be very whipsawy. Okay, it's going to be very whipsawy this morning. It's going to be choppy, but with a strong whipsaw. We're coming into the weekend as well. We're driving into the weekend as well, which means that those who are carrying risk will want to balance that off a little bit, whether in stocks or whatever. So this morning is one of those. It's one of those situations where it's gonna be, you know, on my point and figure chart, it's gonna look a whole lot like what we saw. Let me see if I can get it. going to look a whole lot like what we saw on this day. This kind of stuff. This kind of stuff. That's what it'll look like. This kind of stuff, where we have a strong move and a strong counter move. So be careful. I'm keeping my hands off on the open. I'm going to wait and observe to see if the market is cheap enough for buyers to come and buy up bargains here, or if there's still some liquidity that needs to be resolved, and therefore sellers might step in. So this is what I want to caution you with. It's likely to be quite whippy this morning. I'll leave you with that. I'm not going to do any, it'll be a joke for me to draw some lines on a chart here. I have my map, right? I have my map. Very important. I have my map of prices. Look at how it hit that 62 very beautifully coming from here. And here. I have my map, and it's a question right now. The market needs to tell me what it wants to do with the prices that I've set out to trade in, period, and then respond accordingly. Those of you who attended yesterday's webcast that I did about growing a small account, I would love to hear your feedback. If you can take a couple minutes and just type them in here. Those of you who did not, I think you should see it. There's a lot of content there. You don't generally hear about this stuff out in the open. I invite you to just take a look and really start approaching trading your account in a very measured, responsible, and business or professional-like way. There's a lot that's shared in that webinar, and hopefully you gain something from it. Hopefully it'll make a difference for your trading. Good luck today, and I'll catch you all on Monday morning. Take care.